Hi everyone, this is Jason Bierach of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He's a successful small cap investor. He started the Gold Stock Bull investment newsletter that covers precious metals and cryptocurrencies. And in the past, he worked as a consultant for large corporations, and then he quit his job and became an entrepreneur, and he's built his own business. Jason Hamlin, thank you for joining me.
Thanks for having me.
Now, Jason, before we talk about how you've achieved success picking out small and micro cap companies and some of the companies you like in gold and altcoins and cryptocurrencies, let's talk about what happened in 2017 and what may happen in 2018 with central banks. So in your opinion, what have the central banks done to all of these different markets?
Well, they've just continued to inflate multiple asset bubbles, whether it's in equities, bonds, or real estate. And we're seeing valuations get to truly ridiculous levels. Looking forward into 2018, I think they're going to have to do the same, even though we're seeing some gradual rate increases by the Fed. I think that they can't move too fast or take rates too high without crashing some of these markets and popping some of these bubbles that they've created. So they're going to have to proceed cautiously. The interesting thing here is that the dollar's been crashing. So there has to be some type of talk behind the scenes of raising rates maybe a little quicker to stop the bleeding there with the dollar. So it's a fine line they walk, because if they raise rates, they hurt these asset bubbles they've inflated. And if they don't raise rates, then they risk the USD continuing to crash versus other currencies. So it's a very interesting situation right now in the markets.
Yeah, I don't think these major central banks, whether it's the People's Bank of China, the Federal Reserve, the European Central Bank, the Bank of Japan, they don't have a viable exit strategy. So maybe, like you said, they can walk a thin line. They can either reduce the amount of liquidity injections, cheap money and credit that they put in. They can maybe take a short break for part of 2018, or they can reduce it, but they can't, stop this entirely without causing basically a market crash because of the total amount that they've put in. They put in tens of trillions of dollars since 2008. And the thing that you mentioned...
No, I was just going to agree. If they take away the punch bowl, then we're going to see some real volatility in multiple markets. I really think they can't do it. And, this rebound that's happened since the 2008-2009 financial crisis has been amazing and unprecedented just in terms of the scope of it. And I think that it would never have rebounded quite as fast or held the gains this long had it not been for continual stimulus by the Fed. So as they start to try to pull this back, it's going to be interesting to see how these markets react. I think they have to do it very slowly, or it's a risky endeavor.
Yeah, I don't think that they can totally stop it, like you said. I think that they can maybe take their foot off the gas a little for a short amount of time. I think they're going to see if they do take their foot off the gas a little bit, if there is a crash or just a correction. But in terms of the leverage in the system, it's just enormous, and I don't really see any signs of that stopping. So you mentioned also a weaker dollar. The head of the European Central Bank, Mario Draghi, he started lobbying some words back at the Treasury Secretary Mnuchin and President Trump. Earlier in 2017, Trump said he wanted a weaker dollar. Then U.S. Treasury Secretary Mnuchin said the same thing in the last week or so, and then Trump reversed course and said he wants a strong dollar. But I think all these countries, Jason, they all seem to be from kind of the same playbook where they're kind of using mercantilism. They want a weaker currency. No one wants a strong currency. Everyone wants a weak currency. Everyone wants to boost exports that way. And so the dollar was strengthening, a couple years ago, and it just made sense that at some point they weren't going to allow it to get too strong, because that could have caused damage too.
Right. Yeah, so we're getting conflicting signals from them on what they want, but obviously there's this sort of race to the base going on between central banks globally, where everyone's trying to have the weaker currency to boost their economy and exports, things of that nature. As that continues or accelerates, I expect precious metals and other commodities to stand to benefit from that, and cryptocurrencies as well as an alternative currency to central bank notes as they continue to inflate into base currencies. I look to these inverse assets as sort of hedges against that.
Now, do you think gold's rise that started in 2017 and has kind of taken a little break now in 2018, do you think that's mostly due to a weaker dollar, or do you think there's other factors to why gold has started to rise again?
No, I think that's been the primary driver. And in fact, I don't think gold has reacted proportionately, really, to the decline of the dollar. I would have expected gold to have risen more strongly based on what the dollar has done over the last year or two. So I think there's some pent-up momentum in the precious metals market that we haven't seen manifest quite yet, because I mean, the dollar dropped from over 100 to under 90 recently, and it typically doesn't move with that type of volatility. So the gold market should have reacted a lot stronger to that move. I've been largely on the sidelines. I like to see the consolidation. I like seeing some of the higher lows on the technical charts that we've seen. But in particular, I'm targeting 1362 gold. It was the 2017 high. So just on a technical analysis basis, we want to see a strong move through that resistance and see gold close a couple of days above that. It did temporarily spike up above that level earlier this week, but then drop back lower again, so it's sort of a false breakout. So I have some gold positions, core positions that we continue to hold, but there's a number of speculative positions in junior mining stocks that are looking very attractive to me, and I'm just waiting for that last technical signal to really back up the truck and jump into this market more aggressively.
So you like to add to positions after a breakout is already confirmed? Is that what you do in your newsletter, or do you tend to be more contrarian and buy when there's negativity and panic and blood on the streets?
Well, I like to look for a bottoming pattern first, and then I like to look for technical breakouts above certain points. So just looking for higher highs and higher lows on the charts to confirm that it's a bottom before jumping in too soon. Of course, calling exact bottoms, it's nearly impossible. Not even the best investors and analysts can do it. But we take this process of basically buying in tranches. So you can take a small position once you think you've seen a bottom, and then increase that position on a breakout and then continue buying. But I don't think we're missing a whole lot at this juncture, because mining stocks really haven't taken off yet. They're not offering the type of leverage to the move in the gold and silver price that we would like to see to confirm that the breakout is real. So I remain a little skeptical. And again, we have core positions that are capturing the upside right now, and that will capture whatever we miss up until that technical breakout. But I'm just saying, at the point until we start adding some of the more speculative junior miner stocks, yes, we're kind of waiting for that price point to be taken out.
And like you brought up, no one can consistently get the bottom. So it sounds to me like you have a really good system for trying to figure out how the bottom can occur. But, even the best professional investors or traders can't always consistently find the bottom of when to invest. So people like to pretend they can. People like to pretend with their track record that they can nail the tops and the bottoms. Maybe once in a while they get lucky and actually nail it. But the majority of people that I've heard claim to hit the tops and the bottoms never actually do it.
That's true. And then what we help to sort of mitigate the inability to time these things perfectly is doing a lot of research into the fundamentals of the companies, finding the best companies which tend to hold up better during the downswings and then tend to be first out of the gates when we do have a major uptrend. So I mostly look at junior mining stocks, high grades, low cost, proven management that's taken past projects from exploration to production, ability to raise capital, friendly mining jurisdiction, low cost of discovery. Up until that point, what has it cost them per ounce of gold that they've discovered? All of these types of different metrics, and look for companies that the markets as a whole have overlooked, that haven't been hyped or promoted. I hate seeing at the bottom of some of these hype emails that you get, like, I was paid $750,000 plus all of these options in order to write this email to you about this junior mining stock. I mean, typically to me, that's a red flag, and I tend to avoid those stocks because you'll have all of those followers rushing in, price shoots up really high, and then inevitably it always crashes back down. So I like to find the companies that are flying under the radar, but have quality projects that have not been promoted and marketed to death.
I completely agree. I was actually going to ask you your checklist for how you successfully invest in small cap companies and how you find them, and you voluntarily gave them. So you saved me asking you a question. You know, one of the things that a lot of people don't do, and I'm sure you do this with your newsletter, is just read the annual report. If you're going to do it on your own or pay someone like you to do it, go through the annual report. They have to disclose the stuff in there. So if they're paying someone, like you said, an enormous amount of money to pump, or if the management team or the board of directors, even though the company's not making money, are giving themselves, you know, ridiculous amounts of free shares and stock options. There was a junior out there, a gold one. They changed their name about 3 or 4 times. I've lost count. And they were giving, the management team was giving themselves over $1 million a year in free shares. And they were doing nothing but just diluting the stock. And you could see that by reading the annual report and looking at the compensation and looking at the share count and how much it's risen for the last 6 or 7 years.
For sure. That's the legwork that a lot of investors don't like to do or don't have the time to do, and that's fine. That's actually some of the work I don't, you know, to sound almost like a little bit of a nerd, but I enjoy doing some of that stuff. I enjoy digging into the data and into the research. My background's in market research for Nielsen. I worked for them for around 10 years doing data analysis for corporations. So I like pulling insights out of large sets of data, finding the nuggets of wisdom that help you make the correct picks, whether doing it, you know, in the corporate world as a consultant or analyzing investment opportunities in these different junior mining companies. So that's something we do on a regular basis. We have not only our portfolio positions, but a list of watch list positions that I've done initial research on and like what I've seen, but we haven't added them yet. So we have this running list that for subscribers that we update every month.
Very good. And, you know, I've known you for years and I've seen some of your stock picks and you just have an outstanding track record. You found Alrico Metals after that spinoff there when there was a merger between Alamos Gold and Alrico Gold. And so that was a spinoff there with the royalty company, and Sandstorm Gold attempted to take over. There was a poison pill. It didn't work. I was worried about the standalone company because it was a combination of like a mine developer and a royalty company. And I remember you did very well in that stock, and the gold price didn't even go up that much.
Yeah, we you know, I think the more research you put in, the better you tend to do versus the market and versus other analysts. But, you know, don't always get it right for sure. But we try to have our odds as high as possible and make sure that the winners outnumber the losers.
Is there another Alrico Metals type of company out there? Because it seems, you know, you mentioned that a lot of the gold stocks are not doing very well. One of the subspaces in gold and silver that is actually doing very well are the royalty and streaming companies. There's a lot of capital going into the space. They're the only ones with capital to actually do deals. So you have companies like Sandstorm Gold and many others who are actually, you know, they've grown during this paper bear market in gold prices for the last 7 years. In my opinion, you know, I think the gold price is manipulated. That's why we had that false breakout, like you said. On the gold chart, I think there was basically a classic textbook bullish inverse head and shoulders pattern. There was a cup with a handle recently, and then, you know, it just didn't break out, which normally has happened in gold for a while now. And I think the royalty and streaming companies, Jason, are the prime beneficiaries of all this bear market and the manipulation because they have good balance sheets. They have a lot of capital to invest, and so they can go in and take advantage of the industry not being in a lot of trouble.
For sure, and we continue to hold a few streamers and royalty companies. I like Sandstorm in particular. I like the Hot Maiden project that they acquired, and some people didn't like the fact that it's moving a little bit away from their previous business model, but I think it's such a high potential blue sky type of project that it was hard to pass up on, and I think they got a fair deal for it. So I continue to hold shares of Sandstorm. And there's a number of juniors that I think the market's overlooking right now. Just to throw out a couple of names, one's Bluestone Resources, another is Lion One Metals, and another is Orca Gold. And just in terms of the quality of intercepts that they're hitting, the resource that they have compared to their market cap, and how little you hear about them anywhere else in terms of analysts or people that are talking about these stocks. So I think all three of those companies have high potential to outperform the rest of the sector over the next year or two. And then we also look into, outside of precious metals, cobalt, lithium. You know, we've been in those for a while on the EV battery play. I think we're still in early stages there of those markets. They got overheated, but if you're looking to get into those sectors, I think they're great to buy on a dip if you have a medium to long-term perspective. So we look at not only precious metals, but other sectors where we're just early in a growth cycle for that particular sector, and where the growth in demand is outstripping the growth in supply. So those are a couple sectors that we're bullish on, and we continue to look to add new companies on dips.
Question about the cobalt market. Now, I know that's been very hot. Isn't a lot of the cobalt supply a byproduct from base metals or other types of mining? And didn't the Democratic Republic of Congo, which is, kind of a misnomer because it's really a military dictatorship, didn't they just put some type of much higher tax? I think it went from 2% to 10% on cobalt mining exports. So that's really spooking the market right now.
Yeah, it tends to be a byproduct of large nickel mines and other base metal mines. And yeah, the market spooked. I think, though, the fundamentals haven't changed. These are probably things that are a bump in the road. The supply-demand fundamentals still are very strong for cobalt, and I think there's going to be a huge shift from gas-powered cars to electric vehicles. We're already starting to see it with the new Tesla model, which is finally kind of in the mainstream price range. And what they're able to do with their cars. And everyone else is kind of nipping at their heels as well. BMW, Nissan, and other companies are really pushing that. So I think it'll probably come faster than we're anticipating. And the demand for cobalt, which is a huge component in EV batteries, is going to be significant. And at current, there's a supply deficit, is my understanding. So I think some of these junior companies that are sitting on a big resource, not yet in production, are offering investors a good risk-reward profile.
And one of my biggest speculation successes was actually Lundin Mining during the 2009 crisis, because the copper price had crashed, and I saw that China was doing a stimulus and the central banks were going to, start reflating the thing. So I figured there was going to be a big move back in copper. And so Lundin Mining had a big mine in the Democratic Republic of Congo. The shares had crashed from a couple dollars a share down to like 20 or 30 cents. And I didn't put too much of my money in because, obviously it was a large ass. It was backed by billionaire Lucas Lundin, but it was in the Democratic Republic of Congo. So I think that's really and I'm sure you could talk about this as position sizing. So if you're going to speculate or invest in some of these riskier juniors, say in a really unstable political area, you have to be careful how much of your money or capital you put in out of your total portfolio.
Yeah, and we tend to make those allocations proportionate to the market cap of the company. So the smaller plays will get a smaller allocation in our portfolio. We realize that they're high risk, high reward types of plays, and I tend to have a high risk profile myself, but whenever I make these trade alerts or recommendations to subscribers, I try to always make that disclaimer that these might not be the right investments for everyone, and that if you do invest in it, make sure it's a smaller percentage of your portfolio. Or when we do things like cryptocurrencies that are really high risk, we say make sure you're investing with money that you could afford to lose, and it wouldn't be too significant to you. So definitely just want to make sure when we're talking about riskier plays that it's smaller amounts.
Yeah, I worked in the newsletter writing industry as well for my day job a few years ago. And so we would put everything that we just discussed a minute ago, we'd put that in all caps in a paragraph saying, do not put all of your money into any one stock pick recommendation, stick with a model portfolio, diversify. And, I would get phone calls from with customer service people handing me the phone of people who still did that anyway. It's just very frustrating. I'm sure you get the same thing.
Yes, for sure. And we're pretty well diversified across precious metals, mining stocks, cryptocurrencies, cannabis stocks, and some other areas. So you just have to manage risk, and that's something every investor should be looking to do actively and making sure they're using best practices in that area.
100% agree. Question about the lithium market. So I get some of the supply demand, but on the supply side, aren't you worried that if the lithium price stays high enough, so the Argentinas, the Chiles, the Bolivias, which have enormous lithium deposits, I've heard Bolivia called basically the Saudi Arabia of lithium. Obviously, the Bolivian government's a mess, but potentially if the price of lithium went high enough and stayed there, wouldn't there be economic incentive for these countries to start developing those undeveloped lithium deposits and then just flood the market?
Absolutely. There is that risk. But there's long lead times with a lot of these mines, and just the growth of demand in the market, I think, is high enough to absorb this new supply coming online. But you're right. At a certain point, if supplies are growing at a faster pace than it is currently, that is a threat to the trajectory of prices. So when we get to that point, if we see the supply demand fundamentals become less attractive, we'll probably scale back. I think, the best time to get in is before people are anticipating this, before the frenzy, before everyone's talking about it. And so we've owned lithium and cobalt plays for well over a year. And at some point, if it looks to be topping and those things that you're talking about start happening, it might make sense to scale back. I think the long-term situation is still very favorable for investors in this space. Again, I think it's hard to, I think a lot of people underestimate just how strong the demand will be for lithium and cobalt and for the shift to electronic vehicles.
We'll be right back with Jason Hamlin after a word from our sponsor.
Do you work out routinely and eat healthy almost all the time? If you eat paleo or vegan or work out routinely, you may be eligible to save up to 33% off on your life insurance thanks to Health IQ. Health IQ is a venture capital-backed, big data technology life insurance company that offers customers life insurance at special rates by using the latest technologies. For more information, please go to healthiq.com/WS4MS. That's healthiq.com/WS4MS. Now, switching gears, the uranium market, the supply demand for the uranium market. Rick Rule is a very, very successful resource investor, financier, speculator in the resource industry. He's been wrong about the recovery in the uranium market for years now. He'll eventually be right at some point because a lot of the uranium miners were losing $30, $40 a pound. Are you bullish on uranium? Do you think that the uranium price has bottomed?
We recently entered one position in a junior uranium stock. It was one of the top performers the last time the uranium price spiked. So I'm starting to see what I believe to be early signs of a bottoming in the price of uranium. Obviously, nobody is profitable at the current time, but I'm looking for projects where they're sitting on a pretty big resource in the ground and that their share price, their market cap is not sufficiently reflecting the resource that they have. So over time, for sure, I have no doubt that uranium prices are going to trend higher. I'm bullish on that. When exactly they take off, of course, it's hard to tell. Like I said, I just started in recent months scaling in, so we have our first position. And if we see prices kind of hold above 20 and continue grinding higher, then we'll continue to add to those positions. But uranium's not going away. You had the Fukushima incident, and I think that spooked the markets a lot. And you had a lot of governments, coming out stating that they're going to roll back their plans for new plants. But it really is one of the best options that we have right now. Sure, solar, wind, geothermal, some of these other things I'm very supportive of, and their efficiency will continue to get better over time as the tech improves. But at the current time, we just can't meet our energy demands without nuclear power. So I expect a breakout in prices, and I expect some of these junior stocks that have been beaten down really hard to rebound, powerfully. So will that happen in 2018? I don't know for sure. I probably expect it by the end of the year, but definitely over the course of the next couple of years.
Yeah, I agree. I would be shocked if we don't have the bear market in uranium ending in the next 2 or 3 years, just because there's so few companies left at this point.
Right.
Yeah. So I mean, look. Even Cameco, Areva, Kazatomprom, the 3 largest uranium producers in the entire world, have had to do massive supply cuts. Just to try to get the market, balanced between supply and demand. I think what happened, like you said, with Fukushima was the Japanese had stocked up on so much supply for uranium, and then they flooded the market, and a lot of people didn't understand how much extra supply they had and how long it would take for the market to digest that.
Right, and that's a great point that you brought up. As a lot of those bigger companies scale back production or shut down mines, of course, supply decreases, and that should have, upward trajectory on the prices, should be supportive of prices going forward. Of course, they can kick those mines back into production at some point, and so that supply will come back into the markets. So it might be a while for it to happen, but at current prices, I think it's a pretty safe bet for investors to start to scale onto some of the higher quality, uranium miners.
Switching now to a different commodity, I believe palladium is now more money than platinum. A lot of people were shocked when the gold price was higher than platinum. Platinum's been in a bear market for a while. Are you playing this any of these trends in platinum and palladium at all? Because I know those are mostly byproduct metals from base metal mines as well.
I don't really track palladium or platinum. We stick mostly to precious metals and some of these other specialty metals where I think the supply-demand fundamentals are particularly strong. I just don't track them enough or research them enough to speak about it.
Okay, fair enough. So basically we've covered all the commodities that you cover and you like. There's not any other ones. Like Jim Rogers has been talking for a while about the soft commodities that he likes, like wheat. And Peter Brandt, who's a famous technical trader, he actually said that wheat has maybe put in a multi-decade bottom. So you don't cover those types of plays like with agriculture stocks or anything?
I used to, but agricultural prices were flat for so long and even declining when I was expecting that they would be moving higher. Over the long term, I think it's a safe play. I think it's a safe bet, but I don't expect any huge returns in those sectors. I just think prices will continue to slowly move higher along with higher inflation rates. So it's a good hedge against inflation, but I think I have an expectation of better returns from some of the metals than other commodities like agriculture.
So let's transition now to a green commodity that's in a gray area. Some places it's illegal, some places it's some places it's legal, some places it's illegal, some places you don't even know the rules completely, like Washington D.C. So let's talk about marijuana. Kind of the big market that's coming online in 2018 is the California market. But Jason, when I look at a lot of the U.S. companies, it seems that they're too tiny, they don't have access to capital, and it looks like the Canadian ones, which actually have full compliance with their banking system, are going to come in here to the U.S. markets at some point and dominate them. Do you see that as well?
I think that's highly likely, but even if they don't rely on growth from the U.S. markets, we're in a couple of different Canadian cannabis stocks, and they've been growing like weed, pun intended, in their own market. They're doing mostly greenhouse growing, and that's better than warehouse growing. You can almost get double yield at half the cost. You're using the power of the sun, and they've been just expanding their footprint and their production capacity so rapidly. The stocks that we hold, they're up 3x last year. So I think we're in the early stages of growth in this sector. Legalization is sweeping the world. The federal government, especially with Jeff Sessions in power, has been reluctant to kind of move progressively in that direction. But I think it's just a matter of time that it's coming. We had, California at the start of the year is now completely legal, medicinal or recreational. So that opens up, as you mentioned, a huge market. And we've already seen some of the Canadian companies start to move in there. And I think there's huge upside not only from, there's kind of two components. There's the recreational use, but then there's the medical use. And I don't think that that's been fully explored or realized yet, what these CBD oils can do in terms of treating epilepsy, sleep disorders, anxiety, even cancer. I've seen some pretty compelling documentaries about people that have used the oil to get rid of skin cancer or even internal types of cancer. So it could be this sort of medical cure, something that you can grow in your backyard that the pharmaceutical companies are very threatened by. So I want to see continued research. Obviously, everything's kind of in initial stages, but if that's true, this is like a dual-pronged market. The demand is going to come from multiple places. People that just want to use it after work to relax or something other than a beer, an alternative, but then also a huge market for multiple types of medical issues. So I see the demand going crazy, and I think some of these companies that have started early, they have first mover advantage. They already have the facilities. They have, gotten the process down. They've lowered their costs. They've got their quality levels very high. They're licensed and have a foothold in multiple markets. I think they're in the very early stages of their growth. And we've seen some, obviously, 3x returns in 2017. So I wouldn't be surprised to see the market. It'll cool down. There'll be pullbacks and corrections for sure. It's moved maybe too fast. But I look at every dip in this market as a buying opportunity. I see the trend being a medium and long-term trajectory to the upside at a pretty rapid pace. So we remain invested to the long side on cannabis stocks, Canadian cannabis stocks in particular, and looking to add to those positions anytime we get significant dips.
Yeah, I think, and there's a lot of tailwinds for long-term marijuana, and a lot of it is because of the financial state of each United State. Each state in the United States. So, you know, some of the states like New Jersey and others that are considering legalizing for recreational purposes marijuana, they really need the extra tax revenue coming in. And so the black market illegal part of the marijuana business, you know, that's a lot of revenue that they can grab and they can tax and regulate. So I think that's finally some tailwinds for the industry. Do you think long-term the marijuana industry has potential to maybe 10, 15, 20 years from now become like $1 trillion industry? Legal wise, not, you know, obviously with the illegal part of the marijuana industry is obviously maybe that level's already, but legal marijuana business.
Yeah, the upside is really uncapped. It's hard to know the exact figure, but I think one of the near-term catalysts could be the Fed taking it off of being Schedule 1. And you know, obviously we're seeing this guy really annoys me if you listen to or watch Jeff Sessions. It's funny to see the conservative politicians being all about states' rights until it comes to something that they don't agree with, and then all of a sudden they want to tell the states what to do. So at some point, look, it shouldn't be a Schedule 1 drug. It's obviously not equivalent in terms of the risk to heroin or cocaine or anything like that. There's obviously some medicinal value. It still needs to be proven to what degree. But if the Fed ever did come to their senses and take it off Schedule 1 or make it legal completely, I think you're going to see a huge move for some of these cannabis stocks. And, you know, we want to be positioned ahead of that happening because, yes, the growth potential is enormous in this market, and I think we're still in early stages.
Well, President Trump may fire Jeff Sessions soon. I don't like Jeff Sessions either because of his civil asset forfeiture stances and then his position on marijuana. Even for medical marijuana, Jeff Sessions is bad. And so I think Jeff Sessions is so old and so outdated that he may have even watched Reefer Madness in high school.
That's probably still going through his head when he's making these decisions. You know, that was some really scary, funny propaganda in hindsight. But at the time, I don't think, you know, many people took it as being funny. They took it as being serious. And it just goes to show how far we've come from those days. And even a number of Republican congressmen have come out against Sessions and have made statements, you know, to the contrary of what he's saying. And you wouldn't typically expect that from the right. So it's nice to see, you know, across the aisle, people coming out in support of this because they're seeing parents come and testify in front of Congress about the benefit of, you know, like seizures have gone away. Their kids would have these horrible seizures, multiple every day, and all of a sudden they're down to one or none or something like that. So it's really hard to deny the medicinal benefit of cannabis, and in particular the cannabinoid oils, I believe, that component that's not psychoactive. So for people that have a problem with the, you know, the drug component, the THC component of it that gets people high, I don't think everyone understands that the CBD oils actually don't get you high at all. You're just getting the medicinal value of the plant, and you're not high for hours of the day or whatever.
I have a friend actually who's a success story of medical marijuana. Her seizures are down a lot thanks to it. But yeah, I think Jeff Sessions, you know, I was joking with my friend. I interviewed a friend who moved to Colorado to go work in the marijuana industry, and he's been working there, I think, for about 4 years now. And we were joking. He thinks that Jeff Sessions actually, in his sex ed class, he actually was forced to watch Reefer Madness, and so that's why he acts like the movie so much. So.
The devilry, it's going to corrupt your children. No, it's funny. And speaking of Colorado, there's actually a stock there that I've been watching. I've bought and sold on and off. It's called Two Rivers Water and Farming, and they bought up a bunch of agricultural land and water rights in southeast Colorado and started building greenhouses, large industrial scale greenhouses with high-tech grow systems in them. And of course, they have the water supply to feed the greenhouse, and they have the expertise to consult to companies. So they lease out greenhouses to cannabis growers in Colorado at incredibly high fees compared to what you could lease it out to a typical agricultural grower, because the margins are so much better than anything you would get on your typical fruits or vegetables or flowers or whatever else people are growing in greenhouses. So it's an interesting business model. They had some infighting between management and some issues with past tenants and stuff like that. It seems like they've got it resolved, and now they're starting to get to where they're going to be cash flow positive. And if that's the case, I think the stock is probably undervalued. Right now it's around 30 cents. It was over $1 within the last year. So I'm keeping my eye on, I still think the Canadian plays are the safer bets, but there are some U.S.-based plays that are interesting, and they never touch the product, which is kind of how they, mitigate some of the legal risk.
Very good. Sounds like an interesting company for our listeners out there to do more research on. Some of the Canadian companies are like Canopy Growth, Aurora, and then I think there's GW Pharmaceutical, who is trying to go through the FDA process for drugs that use cannabis to cure illnesses.
Right. And GW, though, I think is UK-based, if I'm remembering right.
Yeah.
So, yeah, it's interesting what they're doing. They're taking the more standard pharmaceutical approach to it, which as long as they're extracting the pure plant extract and they're not creating some type of synthetic alternative, I think it's fine. But the synthetic stuff is shown some pretty poor results from what I've researched.
So for the remainder of the interview, Jason, let's talk about cryptocurrencies, altcoins, and ICOs. So do you think Bitcoin, this correction in Bitcoin, is it justified that Bitcoin is losing its luster? Is there in your opinion, is there huge problems with Bitcoin that these other altcoins are taking advantage of and potentially solving problems that the Bitcoin developers have not fixed yet?
Sure. So let's talk about the price first. Bitcoin was up 20x at one point over the past year. So it went from just under $1,000 at the start of 2017, all the way up to around 20,000. It's since pulled back to 10,000. So the markets were undoubtedly overheated. This 50% retracement, although it's steep and painful, I think it's probably good for the long-term sustainability of the market. You have to shake out the weak hands and sort of reset things. And it became manic. I mean, everybody was talking about it everywhere that I went. And there was a kind of a kid, I'm like, oh, this isn't good. I'm hearing about it everywhere from everyone. And 6 months prior to that, nobody knew what it was. So it was amazing how quick it came into the public psyche, how quick you're seeing it on CNBC and Jim Cramer and all of this stuff. Everybody's suddenly talking about it. I've been in it for a long time. I was an early investor and early adopter, recommended to our subscribers. First started talking about it at around $100, and then we got in under 1,000. So it's been a great run-up for us. I didn't sell exactly at the top. We started moving into some altcoins recently, and I do view this as a good buying opportunity. I think cryptocurrencies are here to stay. Certainly government regulation is one of the biggest threats, and we're seeing that. And every time, I think it was India this morning, it's been South Korea and other countries, but the government will come out and make some statements. Or it'll just be one person within the government making a bearish statement about it, how they're going to crack down on it. A week or two later, it comes out that's not the position of the government, and the price goes back up. Ultimately, while I view it as the biggest risk, because they can just threaten with violence to throw people in jail for using it, I don't think they're going to be able to stop it. And I'm not even sure that they will try all that convincingly, because it's decentralized. So by its nature, there's always going to exist black markets. It's always going to be possible to buy, sell, and use cryptocurrencies. And with futures trading being approved, ETFs coming, Japan legalizing it, Australia legalizing, I mean, it seems to me, if anything, the momentum is towards greater legalization and use of the cryptocurrency. So anytime there's this, they call it FUD, fear, uncertainty, or doubt, by these news stories, I take it as a good opportunity to start buying. And I did that myself. I added to my positions today. I don't recommend that it be a large percentage of your portfolio, but it's been hands down the best investment of my lifetime that you could have possibly made. I mean, where do you get 20x returns in a single year? And that's just with Bitcoin. You mentioned altcoins. Ethereum was up 150x in 2017, roughly. Now, that makes investing in precious metals or some of these other things kind of boring by comparison. So I think blockchain, the tech behind it, is one component of it. The other component is a new form of money, voluntarily adopted money with limited supply and greater utility than what we've seen in the past. And for those reasons, I think it will continue to increase in price and value, increase in adoption and usage, and I remain bullish on it despite, recent bumps in the road.
I sold my Ethereum after a 9-fold move last year, so whoops. But I think for now, I agree with you that governments right now, they don't want to fully ban it. They're just kind of in the tax and regulate stage. And look, there's a whole bunch of new tax revenue for governments. So, but
Sure.
I am worried that they will try to take the technology behind Bitcoin, blockchain technology, and try to force it on people for a cashless society to, ban cash, track and tax every single transaction, economic transaction. So if I'm just paying you back for lunch or something that you bought, then they're going to put a VAT tax on that. They could put an additional different types of taxes on that. So as a libertarian, someone who doesn't want to be forced with legal tender laws by governments with force into only doing one thing, it definitely worries me that the technology, its intended purpose obviously was not for a cashless society. At least I don't think that's what Satoshi wanted, whoever wrote the white paper initially. But, it could be governments throughout history have always tried to take new technology and either use it as a weapon against their own citizens or against an enemy, or as a weapon to maybe take away the liberty or rights of their own people.
So I've heard those concerns. I think the fears are largely unfounded because there are multiple anonymous, privacy-focused cryptocurrencies that you can use that the government can't track. And they can't shut down, and there's no central corporation or headquarters where they can go to and say, give me the records of all your users. They can do that with Coinbase because that's an on-ramp into the cryptocurrency market. That's where you connect to your bank, and so all of that can be tracked. But Zcash, Monero, and several other new ones, when you use them and then receive those coins, they can't be tracked. Nobody knows who it went to, and nobody can follow the trail back from it. So I don't think that's really too big of a concern. Of course, the governments will always do nefarious things, always try to find ways to control new technology, but this is part of the beauty in cryptocurrencies is that it is a decentralized technology. So it's going to be hard to track and use in the ways that you're talking about, and it's going to be hard to shut down or control or co-opt. Some people are concerned that the Fed will come out with their own coin, that JP Morgan will have their own version, whatever. But people aren't going to use those because those are centralized coins. They go against the whole idea and attractiveness of cryptocurrencies to begin with. So I think some of those fears are a little overblown in my perspective.
Yeah, I don't think people will voluntarily use those coins. So if there is like a world coin or a Fed coin or a crypto rubles coming out soon, Venezuela has a crackpot coin called Petrocoin. It'll probably be I think it's another way for a corrupt government to raise money. I don't think, it's going to really be backed by oil like they claim. So I just think that, governments aren't going to voluntarily get people to do that stuff, but they can use legal tender laws and force. If you have millions of dollars or more in Bitcoin or cryptocurrency profits, all of a sudden they could make you an evil tax evader, a criminal if you don't pay a higher windfall profits tax. So they could change the rules like that, but yeah, I don't think they're gonna go after all the crypto people right now because I think they see it as a new source of tax revenue. I mean, there's many for a small, like the U.S. obviously is so big that an extra like $20 billion a year in tax revenue is not going to mean a whole bunch. But for a country maybe like South Korea, where they went after the exchange, right? It wasn't because it was anonymous per se. It was because they want the tax revenues. So
Sure.
The anonymous people, they have to put their names down. So now they're going to pay taxes, and the South Korean government's going to probably be making many billions of dollars more, and their economy is smaller than the U.S. So that'll really help their government out with the tax revenues.
Yeah, and there's two ways to view that situation. Sure, corrupt governments will be able to skirt regulations and things of this nature, but in some cases the regulations are the sanctions are unfair. In some cases, it's just corporations and central banks of big Western countries that don't like the fact that these countries aren't playing by their rules, don't like the fact that they're not using dollars or they're not giving favorable treatment to U.S. corporations or whatever it may be. So in that case, they're using crypto to, move funds around and get investments from other countries and things. And I don't necessarily think that's always a bad thing. You have to kind of look at it on a case-by-case basis. But certainly for the people, it's been a huge positive. If you look in Venezuela with the rampant hyperinflation that they're going through, it's literally saved lives of the citizens there. The people that bought into cryptocurrency can afford to go buy all the essentials for their family and then some. They can survive and thrive even in this type of environment where those that just hold on to the state-sponsored fiat money, it's losing value so quickly that by the time that they get their hands on it and go to the grocery store, they can't buy anything. And there are literally people dying every day there from not being able to access food and medicine and the basic essentials for survival. So it's funny to think of it in those terms. It's actually saving lives, this new technology. And on a larger scale, I wrote an article about the moral case for investing in cryptocurrencies. It's posted on Steemit. But I think the big picture of what it actually does is decentralized wealth and power in the world. And I think that the wealth and power has been centralized, via nefarious, scandalous types of means. So the more that the money is spread out through society and the power and the resources aren't in the hands of the few, I think that's better for society as a whole. So I like the fact that you have lots of cryptocurrency millionaires that tend to be of the maybe libertarian, free market, anarchist sort of persuasion, and that people are using a money that's not controlled by a small group of central bankers that get to print the money and get to give it to their member banks at near zero interest rates. So I love cryptocurrencies not only in terms of their utility and use, not only the technology behind it, the investment returns obviously have been great, but also just the moral and philosophical case for investing in them. And for all those reasons, I continue to hold and buy.
Great points. And the central banks, since the 2008 financial crisis, they've actually exacerbated the wealth gap, the wealth disparity by giving the financial system all this extra cheap money and credit. And so they've actually made things worse. And what worries me is that they're blaming the private sector when it's actually, the central banks that are causing this. In terms of Bitcoin miners, Bitcoin and Ethereum miners, the publicly traded ones, do you like those like MGT Capital or High Blockchain, or would you rather go and buy the cryptocurrencies or the altcoins?
I think in general, just holding the coins has been the better route thus far. I like some of those companies if their valuations come down, and they've started to come down pretty significantly over the last couple of weeks. But there was that phase where anyone that mentioned blockchain in their name or description, all of a sudden their stock was worth 4 or 5 times what it was the day before. So there's that frenzy stage, which we definitely want to avoid. But there's probably still a lot of profitable mining operations to be built at this stage. And I think it's good for the ecosystem as a whole that it's not concentrated so heavily in China with a few big miners. So I like to see more mining startups around the world. But eventually, I think we're going to see a shift towards other methods of confirming transactions, validating and confirming transactions on the blockchain. So there's things like proof of stake. There's hybrid ways, there's these new hash and mesh technologies, because we want to find a way that doesn't require such enormous energy consumption and it doesn't allow for a couple big players to sort of concentrate the mining power, the hash power. So over time, and of course the rewards from mining decline over time, right? So over time, I don't think it's a profitable long-term strategy, but for the next several years, those companies can stand to do very well. Hive Blockchain, MGT, other companies that are doing mining like that, there's probably still a certain period left of profitability there.
And depending upon who you speak to, the Bitcoin miners, a lot of them are to blame then for kind of the mess that's with Bitcoin right now, and why Bitcoin, the transaction costs now are so high, and how it could take a long time to get your transactions confirmed. And that, in my opinion, that's opened up the door for additional competition that a couple years ago probably would not have come to fruition. So if the team that was working with Bitcoin was a little bit more coordinated, a little bit more cooperative, there probably wouldn't be nearly as much competition now. But look at the Bitcoin dominance, right? So last year, basically a year ago in February 2017, Bitcoin had 80% of all the crypto market cap, and then now it's down to below 34%.
Right. And so that's the downside of decentralized currency and decentralized governance. You know, in some ways it's really good. In other ways, they can't move as fast as coins that have some kind of centralized leadership and coding team. But I think with Bitcoin, they've actually recently tested transactions with SegWit and Lightning Network, and they were instant and they cost a fraction of a penny. So this technology is just starting to roll out. We need some of the bigger players to start to use it, like Coinbase, who's been dragging their feet for whatever reason. But I think it's inevitable that as more and more transactions are done over SegWit and over the Lightning Network, that Bitcoin overcomes the scaling issue, the transaction cost and time issue. I think we're just on the precipice of that being history. So I'm bullish on the outlook of Bitcoin for that reason. I think some of these other, I mean, it's great that it's opened the door for all of these other coins. I want as many competing cryptocurrencies as possible. I want everyone to push each other and push the technology forward as best possible. And there are some exciting altcoins out there for sure that we've been invested in that not only do things faster and better as a currency, but also like platforms and companies that are targeting and disrupting specific sectors by doing things better, faster, cheaper, and in a decentralized manner that the current companies can't do. So I think we're going to see revolutionary change in the way business is done, and there's going to be disruption of multi-billion-dollar industries, everything from Airbnb, who's going to be disrupted by these companies like B Token that do decentralized home rental or vacation rental platforms. Uber, there's companies that now just let drivers connect directly to people that need a ride instead of Uber sitting in the middle and taking 30%. Music distribution, that'll be a more fair reward system for the artists that are creating the music. Banking, healthcare, medical records on the blockchain that are better protected, immutable, and can't be hacked or accessed by other people, sensitive data, stuff like that. There's cloud computing. There's online gambling. A company called Edgeless is doing an edgeless casino where the casino has no edge, and they still are able to make a profit via mistakes and all kinds of other issues. They have a system for still profiting, but they don't take an edge. And it's done on the blockchain, so everything is verified and open source, so you know there's no fraud going on behind the scenes. So you think about some of this kind of innovation that blockchain is enabling, and it's amazing, and we're just seeing the early stages of what this is able to do. So I'm very excited about the potential in these sectors.
Yeah, I totally agree. I went to a DC Blockchain Summit conference in March of last year. There's another one coming up next month. And so they had panels with all the different industries that are testing blockchain right now, and you name some of them. So it's very exciting. You know, they haven't let the blockchains live yet per se, but you know, companies are using them behind the scenes for databases, for their behind the their back databases behind their wall, their cyber walls. And which altcoins do you like then? So there's so many of them. This is one of the problems I have with cryptocurrency. I don't have a technology background. It seems like there's so many altcoins. There's so many ICOs. It's basically a full-time job trying to figure out which ones are even halfway decent.
Right. I'm big on platform coins where other businesses are building on their platform and utilizing their platform. Ethereum was kind of the first to do that with the smart contract platform. Neo is the Chinese version of Ethereum, and they have their own smart contract platform that in some ways is superior to Ethereum. There's companies like Stellar, Cardano, EOS, which is being developed by Dan Larimer, is one of the best minds in the space, and they're going to have free transactions, instant transactions, and be able to compete with Visa and MasterCard and things of this in terms of transactions per second, but have an entire ecosystem that people can build on top of. So I like these kind of coins. I like Internet of Things coins that are playing in that space. So they're going to be enabling not only communication between IoT devices, but also micropayments. So one device could pay another device for a service or a delivery without any involvement from the owner. And I like companies that are disrupting antiquated sectors that are using old technology, as I think they're going to come in and steal share rapidly from those sectors. So I'm actually an advisor with one company that's doing an ICO right now called Insights Network. And there's several companies in this space, but what they're doing is allowing you to control and monetize your data. Right now, everybody gives it to Facebook or Google for free, and it's one of their biggest profit centers, right? They take that data, package it, and sell it to corporations that want to know your demographics and shopping habits and interests and all of that kind of stuff. It's a big invasion of privacy to begin with, but it's not a very fair model where they just take all that information for free and make billions of dollars off of it every year. So there are all of these companies, including Insights Network, that are allowing you to control, own, and then monetize your data, giving permission for when people can see your data and then rewarding you as basically a cut of what that data, the value that data generates. And there's also logging platforms, and there's decentralized YouTube platforms where you get paid for creating the content rather than YouTube taking most of it and giving you a small fraction. It's this type of innovation that I think is really going to create a lot of significant change. And what's exciting to me, what I've been doing a lot of recently, is ICO research. And so ICOs are initial coin offerings, right? It's a new funding model in and of itself that is brilliant and have raised more money than VC markets in the last year. So when a company wants to launch, they do an ICO, people send them Bitcoin or Ethereum in exchange for their tokens, and then they use those funds to go out and launch or grow their business. Now, there's lots of scams, there's lots of fraud, there's lots of companies that shouldn't be getting money that are getting money, and everybody's just throwing funds at these ICOs, so you have to be very selective. But I put together an ICO tracker that essentially goes and looks at all of these companies and tries to pick out the best of them. And the ones that we picked out last year, average returns of 1,100% in just the short time frame from when you could have bought the token at ICO to when it hit an exchange and started trading freely on the market. So that sector, although it's starting to become a little crowded, I think there's still a lot of opportunity there to get in early and do early stage investments for people that maybe aren't accredited or sophisticated and haven't been able to have access to IPO markets. It's still largely unregulated, which to me is a good thing as long as you do your research. But they're starting to regulate things a little more tightly. It's something for your listeners to check into. Initial coin offerings or token sales, if you have a high risk tolerance and are looking for some of those home run type returns, is something that we do as part of our service.
Yeah, and for $195 for a subscription, those types of returns, I'm not saying you're going to get that on every single one, but that's pretty incredible. A lot of these small cap newsletters, Jason, like I've worked in the newsletter industry, I've interviewed a lot of newsletter writers. A lot of them lie about their track records. When they have bad investments, they just remove them from the calculations that they have to make it look like they have a better track record. So the industry is very shady. But I've known you for years, and you've had a lot of winning stock picks in the sector, and you've done well in cryptocurrencies. How do you store your cryptocurrencies? Because obviously, if people are going to be buying a lot of these ICOs, a lot of altcoins, it seems really difficult then for the average person to go out and figure out how to store all these different cryptos.
Yeah, and as part of the subscription, we have a beginner's guide for how to get started with investing in cryptos, and that's all covered in there. But in essence, the best way to store cryptocurrency is on a hardware wallet because it is offline. It's stored offline. It's got its own little screen and pin that you put in that doesn't go through the computer. So if anyone's using a keylogger or there's malware on your computer, it can't access what's going on the hardware wallet. So anyone that has a large amount, I highly suggest getting a hardware wallet. There's the Trezor and Nano Ledger and one other, I believe, but those are the two main ones. And then the other way you can do it is on a software wallet where you control the private keys, right? That's the key thing. You want to limit your third-party risks. So I tend to leave as little as possible on exchanges because there's always failures. There's always hacks. I leave a little bit there that I trade with, and a little bit on software wallets, but the majority of the funds are best kept on a hardware wallet.
Yeah, so I was wondering then if the hardware wallets, because I just interviewed Chris Coney too today, Today's Thursday, February 1st. And so what he said is there's not, I don't think, hardware wallets for every single altcoin yet. So that's kind of the challenge, is the hardware wallet industry is trying to catch up to all these different altcoins. So you're so far ahead finding these new altcoins and these new ICOs, but the hardware wallet community doesn't have the code built in to secure all these on hardware wallets yet.
In some cases, but a lot of the ICO tokens are ERC20 tokens. They're Ethereum platform tokens, and the hardware wallets can store ERC20 tokens or can hold the private keys for MyEther wallet, it's called. It's an open source wallet where you can create your wallet and your keys online. You can use your Trezor or wallet to hold those keys. So they never reside online. They never get passed online in a way that anyone could hack. So actually, for a lot of these altcoins, if they're ERC20 tokens, you can keep them in there, and it's just as good as keeping them anywhere else. Well, better. It gives you the advantages of the hardware wallet. But there are certainly a few that aren't where I have to keep them on an exchange or keep them in the native wallet of that particular company. So most companies have a wallet that they use, but the quality can vary. But there are a few coins that I hold where you can actually stake them. So people that are interested in sort of dividend returns or incomes, one of the methods of validating transactions is via staking. And so if you keep your coins in a wallet, like with Neo, there's a wallet called Neon. And if you hold your coins in there, you get rewarded in gas, which is another coin by Neo that has a value and trades on exchanges and everything. And on average, I've gotten about 8% in the last year just for holding my Neo coins in the wallet. So hardware wallet for for the majority, whatever you can get on there, your Bitcoin, your Ethereum, whatever makes up the bulk of your cryptocurrency portfolio. And then if you have a small amount that you keep on exchanges in native wallets or on software wallets, that way it limits your risk.
Very good. I think you answered that question thoroughly. It's such a rapidly developing industry. There's a lot of hacks, so it's very dangerous there. And so people need to learn how to store their coins to protect themselves. And I think you already mentioned this, but it's dangerous to put too much of your total net worth into cryptocurrencies, although a lot of people now, they put a little bit and it's gone up so much that now they have a disproportionate amount of their money in cryptocurrency.
Right. Yeah, I mean, 5 to 10% is probably a standard answer, but I'm definitely over that allocation. I'm probably overly exposed, but I do have a high risk profile and just very bullish on the sector in general. So I tend not to do too much rebalancing. My initial investment was taken out a long time ago. So in essence, I'm playing with house money and it's all upside, which is a great position to be in. I know not everyone, for the people that bought in at 19,000 Bitcoin or whatever, it's a different outlook. But for those that followed our newsletter and bought Bitcoin, at $1,000 or bought Ethereum at $30, then these type of pullbacks are easier to stomach. And if you pulled your initial investment out, then this is a free ride.
Excellent. Well, last question before I let you go, since I've kept you now for over an hour, although you've given our listeners a great amount of information. Your newsletter is probably a bargain at the price it is. I know people that sell newsletters for a lot more that give a lot less information. But last question is, were you scared then to quit your job, get out of the rat race, and try to become financially independent by starting your own business as an entrepreneur?
I'm sorry, can you say that again?
Last question is, were you scared to quit your job, get out of the rat race, and start your own business and try to become, a financially independent entrepreneur?
No, not at all. And I chose to resign from the company that I was working at. They treated me fair. They paid well. It was a good work environment and everything. But ultimately, there's a lot of freedom in doing this and a lot more upside where all the extra work that you put in goes into your pocket. It's your reward. So I think I would recommend to anyone, especially in the earlier stages of the career, to take a risk, to find something that you truly enjoy doing, that you're passionate about, and then go out in the world and try to find a way of making money doing that, as opposed to taking a job that makes money that you don't really care for, where you're staring at the clock all day and waiting to be able to go home. I mean, that's a miserable way to exist, and that's most of your life. So I think especially these days, there are so many opportunities to start your own business, to work from home, to set your own hours, and to control your own destiny, financial and otherwise. So It wasn't scary for me at the time, even though I was near broke and, exhausted my savings multiple times. But I think it's the right thing to do. So I encourage everyone to be brave and take the leap if that's something that they're interested in.
Well, Jason, I want to thank you very much for your time today. I've kept you a long time, but I think there's great information in this interview, and I'm definitely going to have to go back and re-listen to this myself to make sure I absorbed all this enough.
Great. Yeah, thanks for your time, Jason, and keep in touch if you ever have any other questions or I can help out with anything.
Great. Well, plug your newsletter one last time, and so our listeners can follow your work and sign up, because it's a bargain at the price you're offering. It's not like you're charging $1,000 for even at $1,000. I'm sure you could probably sell it to hedge funds, but you're offering it at a reasonable price most people can afford.
Yeah, it's $495 for a year. The $195 is sort of the trial membership for 3 months, so you can check it out at a low cost and see if it's for you or not. But you can access all of that information at goldstockbull.com, goldstockbull.com. And the membership gives you real-time access to our portfolio. The investment newsletter, the Contrarian report, comes out once a month. And we do weekly updates and trade alerts, as well as the cryptocurrency ICO tracker that I told you about, which is really an in-depth analysis, review, and rating system of all of these ICOs that are coming out. And as well as what I do that a lot of other newsletters don't is give personal access to my email and answer questions typically within 24 hours. If any subscribers have questions or concerns or don't understand anything, I try to make myself available and be very responsive and know a lot of them on a first-name basis, which is something I think you don't get in the industry a lot. And the last thing is I don't accept any kind of payment for talking about companies or promoting companies, and I know that's also something that several newsletter writers do. So we try to eliminate the conflict of interest. The stuff that I recommend are investments that I'm making myself almost all of the time. And so it's goldstockbull.com.
Excellent. And I don't trust people that don't eat their own cooking. So
Exactly.
Okay, great. Well, thank you for your time, Jason, and we'll definitely have to have you back on again in the near future. I waited too long to get you back on, and you're definitely a wealth of information. So thank you for your time, and Happy New Year, buddy.
Great. You too, Jason.